The Australian share market doesn't know where it's heading next. Those are the words of my next guest, Scott Phillips of the Motley Fool, as we also take a look at what role the trader's favourite carry currency, the Australian dollar, is playing in ASX movements. Scott also shared with me his stock picks and stock put downs. Scott Phillips, many thanks for taking the time to join us at Dukascopy TV once again. It's a pleasure to receive you.
Thank you, Natalie. Good to be with you.
No problem at all. Okay, let's jump straight to it. Yesterday, it was rates day and races day yesterday. We had both the ASX and the Aussie dollar drop just moments ahead of that RBA hold decision. Was this sort of a par for the course move, or was it an indicator that perhaps markets had priced in a rate cut a little bit more than expected?
Yeah, I think that was the case. We did see the market drop and then rebound quite quickly as a result of that rates not being cut as was expected. And I think that's exactly the point. Is there was a concern that, or a feeling that maybe rates will go down. People trying to, I guess, front run that, maybe take the opportunity at the very last minute. Turns out it didn't work so well, and that's always the risk of trying to do these things just before a rates decision. But as you say, the RBA happy to leave rates on hold. A situation very much where it was a bit of a knife-edge decision. Most people were expecting rates to stay on hold. They did stay on hold in the event. I think because the RBA simply didn't see the need, with rates already at a very, very low level, effectively historical lows, to make that further rate cut. They didn't necessarily believe there was enough concern in the economy to need further stimulus.
We did, though, however, see gains on the ASX off the back of that. It broke a 6-day losing streak. What are some of the actual clear drivers that we're seeing in what is a pretty tepid market, really? Yeah,
tepid's a great word, Natalie. We've seen so much volatility and fluctuation, but really in a very small range. And so it's the market, I don't really think, knows where to go next. And it really comes down to the macro factors that are impacting the economy right now and the market as a result. China obviously still very much on the Australian radar. US jobs, US payrolls, but also US interest rates are still the unknown. Are people expecting a rate cut maybe in December, maybe not? That's still really on top of people's minds. Lastly here, profit growth in the Australian market really hasn't been great. Some of our biggest companies, Woolworths is a clear example of a company that's in a little bit of trouble when it comes to profit growth year on year. There's been not a lot of positivity to go around, and I think in that circumstance, markets hoping for the best but expecting the worst. That's really keeping it in a tight range because there's not a lot of lead for the market broadly. There's not a real sense of, are we off to the races? Are there going to be better gains ahead, better days ahead, or are we still waiting to see what the RBA does, what the Fed does, what China does? Lots of macro factors seem to be weighing on the ASX market right now.
The Aussie dollar similarly saw sort of a bit of a bounce back. We closed that rates day on 72 US cents. Is there a level of correlation really between that market performance and Aussie dollar performance? We know that the local currency is a really big one for the carry trade. That's where traders like it. But how does it really help out?
Yeah, look, there's no direct correlation necessarily. In this circumstance, it does seem very much that, as you say, the carry trade is there, and of course that's why interest rates matter a lot and the changes there. But also more broadly, I think it's still a commodities currency. And so when you think about what's happening with the broader commodities markets, China in particular, iron ore very specifically for Australia, and let's say gold, you're really seeing a market that's, I guess, the currency moves with investor sentiment towards the Australian market and commodities more broadly. We've seen the banks, of course, sell off quite dramatically over the last 6 or 8 months. Again, that was where a lot of carry trade, not only for the currency itself, but for the simple dividend yield that was available for those companies. Really, again, with share prices falling, the US looking like a better place to be investing, you're seeing the US dollar strengthen, therefore the AUD weaken. And at the same time, US investors thinking, well, do I need to be in Australia, in the market in Australia anymore? So you're seeing people move out of the market and out of the currency at the same time. That's putting downward pressure on both the Australian dollar and the ASX.
So we're also in AGM season at the moment. We've got a raft of AGM meetings, quarterly reports, changes in production, earnings guidance, all of it really. With that said, who are you kind of watching out for at the moment? Who's kind of your stock pick or your stock not?
Yeah. Look, it's really looking at the broader health of the economy through some of these outlooks is really important right now. So we talked about, where does the economy go to next and where does the market go next? Profit growth is going to be really important across the economy, but in two main areas in particular. Financials are going to be important because, frankly, that's where 40% of the Australian market is. So where the banks go, so goes the ASX. Bank profit growth has been pretty tepid, as you mentioned. That's a great word to use. It's been a tough time for the banks of recent because they can't get that house price growth that leads to debt growth. Debt growth means bank profit growth, of course. And while that's not happening to the same degree, you're not seeing banks profit grow at the same rate. And of course, they've taken on more capital because of the new Basel rules that are being brought in. So you've got that combination of tough credit growth situation, really slowing down from what we used to. At the same time, banks having to hold more capital. They've raised more capital from shareholders. That's a tough area. On the other hand, you've got the consumer discretionary space. So again, how ready is the Australian consumer to go and spend their money in our stores, in our businesses in Australia? That really does flow through the economy. Home building is really important as part of that, of course. Home furnishings, Harvey Norman, one of our larger retailers, done reasonably well recently. So that's a nice bright spot. Saying people are getting out there, spending a few more dollars than they perhaps used to. Not so much in consumer electronics, but in the soft furnishings area. Outdoor furniture, beds, lounges, sofas, those kind of things. That does show there's some strength in the economy. And building materials companies' outlooks are still very, very strong. So that's good news if that does become a leading indicator. We think it will be. But how the consumer is thinking, particularly as we go towards Christmas, is really important. Are people prepared to open the wallets, open the purses, spend some money that really is going to move through the economy in that multiplier effect that we know it has? If that's the case, we're off to the races. Again, to use the pun. If that's not going to be the case, then we might be another tough quarter and a half until we really see the US Fed move, the RBA either move or not move, and how that impacts the exchange rate, and then again, Australian economic activity as a result.
Well, we'll certainly be checking in with you again soon to see how markets are tracking. Scott Phillips, always a pleasure. Thanks for the update.
Thanks, Natalie. Good to be with you.
It is always a pleasure to receive Scott Phillips' comments. Scott Phillips there of the Motley Fool. That is all we've got time for right now, but don't go away as the Dukascopy TV team will be back with plenty more exclusive interviews for you. Goodbye.